So as I promised, the first sentiment indicator that we want to use is based on volatility. All right, volatility. Excuse my writing, my handwriting is terrible. That's why I could never be a school teacher. The kids wouldn't be able to understand what I'm saying. So we want to look at volatility. Why do we want to look at volatility? When markets are volatile, you get higher percentage big moves. When volatility is low, you get smaller moves. Now, if volatility is really high, you don't need to create a big position, because if volatility is high, you can buy less shares or less contracts and you can have that volatility. If volatility is low, that means your risk is lower. So, but here's the bigger picture. Usually stocks rise when volatility is low, and stocks go down when volatility is high. And that's the biggest reason. So what we do is we look at what is called the VIX. The VIX is an index, and this index tracks the S&P 500 options. Okay? And what the VIX does with the S&P 500 options, okay, is it gives us, or it tells us, if those options are expensive or if they're cheap. And if they're expensive, that means there's a higher odds that the stock market is not going to go up. And if they're cheap, there's a good chance that the stock market will go up, because they move from being underpriced, overpriced, underpriced, overpriced. Remember, options move from being below fair value to being above the fair value. They overreact in both directions, both up and down. So the VIX gauges the S&P 500 options volatility level. And typically, if the volatility level is below, if the VIX is below 20, and you can find, there's usually a dollar sign, and you can find the VIX on any technical indicator on any platform, but type in question mark, dollar mark VIX, and you will get it. And if you see it below 20, the odds are there's very little fear in the market. And if you see VIX above 20, that means there's fear in the market, and that means the odds are the market will go down instead of up. So my advice is to look at sentiment via VIX and be careful when it's above 20 and you're looking to go long. Try to buy the market when it's below 20, and try to sell the market or stay out of the market when VIX rises above 20. Okay, that's the magic number on the VIX, and it's a dollar sign VIX. Hope that helps.